Hey everyone, today we're going to be going over finding trades with consistent premium. Now, that may sound a little confusing, but all we're saying is we're looking for scenarios or certain trades or certain tickers that we can see profits that come in at a very frequent rate. So, with that being said, what we're going to go over today is we're going to go over how to look for these types of trades, why these trades are there, aka looking at risk factors, whether that's quantitative or fundamental, and then lastly, of course, placing the trade to take advantage of this consistent premium. So, without further ado, today's example is going to be on ticker symbol ASHR. This is one of the Chinese ETFs. So, obviously, there might be some risk associated with that, right? So, we are currently seeing that this over the past year is showing the signs that we would want of a consistent trade, a consistent premium. We can see that the implied volatility of the green line continues to outpace that blue line. This almost looks arbitrary, right? This, you usually never see something like this. Like, for example, if we take a look at something like Apple, the biggest name in the United States, you can see that there are periods where, selling vol on Apple is actually really, really bad, right? It's really bad, right? Or if you want to use an example of, let's say, FPY, right? The S&P 500, right? Similarly, because it's an ETF, you can also see that there are times where this is not profitable in the slightest, right? For example, imagine selling vol here on August 19th at 18 and a half, right? So you'd have to go out to around September 19th, and that's at 23. So that's a loss. So this is my point, is that you rarely see this, right? And on names you can find it, like on ASHR, you probably want to either hit it or first more smart or more being a little more intelligent, right, than the rest of the street that might just hit this. Ask yourselves, why is this here? It's Chinese. That's the first thing. Number one, China. We know what's going on with China. We know why this most likely was happening back here. The fear of lockdowns, the fear that China's going to go back into full blown zero COVID, the fear that, China's going to completely shut down like 2020 again. Those were legitimate fears back then. And it's why the premium existed. Because nobody knew. No one knew what the Chinese government was going to do. Now, we have to ask ourselves, well, why is it kicking up over the past couple of months? I mean, or past couple of days. We saw this on January 27th at 21 and a half. We've now seen it rise to over 23. Why is it going up? Well, the reason that it could be going up is most likely due to what? This, right? Chinese spy balloons. That is probably the biggest risk, right? If you guys aren't familiar with this, I mean, most people probably are. We saw, Chinese spy balloon fly across the United States. There's another one in Latin America. And there is this fear and uncertainty that there could be some retaliation from the United States. They could tack on additional sanctions that could severely damage trade relations between the two countries and things of that nature. However, China and the US are the largest trading partner between each other. Any sort of sanction or any sort of mass trade embargo is going to have damaging effects to both parties. So it doesn't appear to be in either party's interest to do that. So the second risk, I think, to this vol position would be this: China and Taiwan. However, recently there have been more positive talks like this. I mean, obviously this could be a total smokescreen, with this Chinese official telling Taiwan, let's keep peace. But China is not like Russia. And what I mean by that is Russia came pretty much out of left field. They built up their military in the winter, then they went barging into Ukraine in February. That is not how China typically does their military operations, not just like now, but like historically. They're very, very thought out. They're very calculated. So I can't imagine that China would just do this outright, out of spite, out of nowhere. There would probably be some propaganda efforts, kind of like there was in Hong Kong, before something like that happened. Again, that part's just my 2 cents, but it's important to ask yourselves, why is this here, right? Because let's say I did think that China was going to invade Taiwan in the next month. Well, okay, if that's probably why it's here, then I probably shouldn't be selling vol on this. Because if China does invade Taiwan, vols are going to look more like this, or even higher, right? So that is one of the key components to look at in that regard. So Lastly, guys, how can we see if this, is still showing that premium, right? Go carry it all back and tie it all back into a bow. How do we know this is still showing a premium? Well, this is how we know, guys. This is just the implied volatility versus the realized volatility. What we can see is that yes, the premium is definitely kicked up since this, China balloon news right around here. Boom, right? Big spike. And now we're seeing, it fade a little bit, but still, I mean, a ratio of 1.62 is, that is, that's phenomenal. And a trade that is so consistent, such as this, that is excellent. So we've checked our box. We can see it's consistent. We have a good guess of why this is probably here. We don't think that the risks are going to be realized in the next month. Now what do? Structure the trade. I already have it set up here, guys. Most likely the best bet probably going to be a straddle. Nothing really in the skews. And we have our forecast volatility put in here, pegging this around 17.5%. Break evens are going to be around 31.80 and 28.20 on both sides. If volatility does get realized and we do not get much move in the stock from here, $51 in P&L would be expected if vols just came down like tomorrow, right? This is one of the better ways to forecast it. Obviously, you could hold till expiration. That's entirely up to you. But at the end of the day, this is just showing you guys again how to capture this. At the end of the day, you may find a different position or structure that you think is better suited for you, and that is totally fine. So besides that, guys, there is really not much else to discuss. I really just hope that you again saw how we found consistency, how we found this, right? How we used the screener to find this, how we were able to see the consistency on a chart. Next, looking at the risks, looking at the China balloon, looking at Taiwan, things of that nature. Then looking at where this is relative to where it's been in the past, right? Always important. And lastly, of course, structuring the trade. So, guys, that is all I have for you in this one. If you guys have any questions, feel free to message me. If you guys also want us to take a look at any of the names that you want us to look at, please feel free to comment below, and I will see you guys in the next one. Peace.